According to the National Association of Realtors, existing home sales fell 4.1% in the month of October. Our next guest says it's a strange market of record high home prices, deep slumping home sales. Joining us now, Lawrence Yun. He's the National Association of Realtors chief economist. Lawrence, try to square this for us. You have rising prices and declining sales. It tells me that maybe the market isn't clearing.
Yes. So we have a situation where multiple offers are still happening, but it's not being fully realized because of the lack of supply. So overall home sales are running up essentially the lowest in decades, yet home prices, due to the lack of supply, are being pushed up higher and higher and setting a new high. We set a new high for the month of October in recent data. So very strange market condition.
And is this people keeping their homes off of the market in part because what? They don't want to lose the great mortgage that they're sitting on?
People refinance their mortgages into 3%, 4%. And if they were to either trade up or trade down, they're looking at much higher mortgage rate conditions today. And that's why we have this lack of supply. And at the same time, we have to remember back in 2019, pre-COVID, we had 4 million housing unit shortage due to decade of underproduction by the home builders in relation to the population growth. So all this combination is leading to this strange condition where we have lack of buyers from higher interest rate, yet people do not give up their homes or low interest rates or lack of supply.
Lawrence, are you sitting on a solution that you could tell us? Why can't you take it with you? And by that, I mean my mortgage, or at least sell my house with my 3% mortgage.
Some of the portable mortgages, I think those should be considered, but it would come with additional costs for the borrower just because from the lender perspective, it creates a little more uncertainty into the marketplace. So there will be additional costs into the system. But the way to address the solution is first, I think the Fed first needs to recognize that inflation is clearly moving in a downward direction. I know that communication has been trying to hold firm, but with the economy showing some signs of weakness, certainly we are seeing in commercial real estate, and which impacts the community banks. We don't want to have another case of Silicon Valley Bank, community bank failures. Right. So I think the Fed clearly needs to consider pivoting. And if that happens, what's going to happen is we're going to see more sellers come onto the market. Maybe it's not the 3 and 4%, but if the mortgage rate is 6%, well, that's clearly better than 8%.
Lawrence, I want to ask you that because people benefited when they waited. When the 10-year got to 5 and mortgages got to 8, market shut down. Now it's back a little bit. The mortgage applications did tick up in the latest report. If I wait more, will I do a little better? And I'm looking at one thing I've looked at for a while here, which is the spread of the 30-year over the 10. It's not just high, but it's expensive relative to the 10-year. So there seems that there's two ways that mortgages in the next 6 months or a year could come down. Way number one is that yields fall in general. But way number two is that the relative spread of the 10-year to the 30-year mortgages gets narrower. Is that an expectation you have?
Yes, with a better certainty about the monetary policy direction, right. I believe the spread will begin to narrow. This morning, Fed, the 10-year Treasury at 4.5. Under normal spread, mortgage rate would be at 6.5 or even lower. Right. That will clearly help. And let's remember for consumers, mortgage rate have fallen for the 4th straight week already. So the mortgage market has already pivoted, even though the Federal Reserve has not.
I'm glad you brought that up, Lawrence, because 2 points is about the average, right, of the spread of the 30-year to the 10. It's not entirely priced off the 10. There's all kinds of other stuff going on, but there's scope here for things to get better next year, maybe not immediately here, Lawrence.
I think the mortgage rate will be in the 6% range next year, and that will certainly make it a market with more buyers and more sellers.